This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. Hi, everybody. Thank you so much for joining us today. And, on behalf of all of us, firstly, all of you investors out there, if it wasn't for you, we really would have no point of existence. And, it's because of you that, we have had the success we've had. And, the last year and a half, obviously, has been completely different than anybody could have predicted. But hopefully 180 has helped you all earn a supplementary income, and that's what we're here to discuss today. We all have to change with the times, and that's what we're helping you do. And this webinar is specifically geared for, I wouldn't call it novice investors, but people that maybe haven't considered a different way of looking at markets than we have. And that's really what we want to help you and just go through a few points with you. And specifically, we want to talk about different strategies that people are using. I think it's, we've gotten a lot of feedback from investors that they still don't quite understand markets, don't quite understand what it is that they want to do. They are making money, but that they certainly want to make more and really grow their portfolios. And, with that, to do, maybe I'll turn it over to Sean here for a couple minutes to talk.
Thanks, Greg, and thanks everyone for joining us. We've had a lot of feedback, especially in the last few months, since there's been a lot more deal flow, and there's a lot of people out there with different positions and different time that they can spend on the market. And something that we are, I guess, pushing more and more is for people to develop their own strategies and to learn from those strategies and use our platform almost as a test that if you're not that active, but you want to become active, just go around and record some of the deals and play around and then form your own strategy. And it seems like successful people in the market work out what works for them, because there's so much psychology in the market. There's so much psychology in what we're doing, and placements, especially. There's so many different structures and IPOs as well. It's what works best for the individual. And we thought we'd bring in two people that, we both know at 180, and they've joined us since we began, and it seems both of them have got a strategy that works for them. So I'm first going to introduce Rob, who's sitting next to me. So Rob, maybe just before we go into the share market, do you want to just give a little bit about yourself and what you do, and then we can go into your strategy?
Yep. So I run in my regular life, I run a business called Ticket Blaster. We do event tickets and for sporting events and concerts. And obviously that was pretty hard hit over COVID, and the timing of 180 Markets was ideal in that respect. And I was able to sort of relay some of my business skills into investing. But yeah,
So Rob, I guess you went from running a full-time business to being stuck at home, not sure what to do with your time. Like how did you? Was that why you got into the market? And that's
I've always had an eye for sort of opportunity and sort of an entrepreneurial flair. So whenever there's an investment, then something that I'm always interested in reading about and learning about, and obviously, a lot of spare time at home, a lot of time to read and research and learn, and I think commerce background. It's quite easy to translate the skills into the market. Obviously, an exceptionally good time to start investing heavily as well.
Well, I think it was a good time because there were so many people like yourselves who had a business background, and then you got stuck at home doing nothing, and that's how all the volume came into the market. How long did it take you to develop a strategy that worked for you? And I mean, don't tell us what your strategy is, but maybe talk a bit about like how it's evolved and some of the successes maybe that you've had.
Yeah, look, I think it definitely evolves every day. You have good days and bad days. Like today was quite a bad day, probably for most. But thankfully that 9 times out of 10 over the last year, there've been good days. So strategy, I mean, it helped having probably coming from a place where I have a high risk appetite. That certainly helped. And that probably comes from having a business background. You get used to taking risk. But yeah, my strategy largely, you kind of just need to, as you mentioned, psychology is exceptionally important. And getting a feel for what investors at the moment, certainly small cap investors, are looking at. So doing a lot of reading, like as silly as some of the stuff is on social media, getting a feel for which commodity is becoming hot, and then when a deal comes out, you've already got an understanding of the sector and the and all the key players across the industry. But yeah, it's certainly evolved. My strategy probably starting out was get stock, check, refresh every 5 minutes for the 2A and sell it as fast as possible and make a small margin and flip my capital into the next deal. Certainly changed over the last year. That strategy doesn't really, I'm not really maximizing my profit by doing that. And I mean, there are times where that is the best strategy and I don't like the stock and it's just a numbers game. But a lot of the time, the companies that I'm choosing to invest in, you're not doing yourself any favors, just dumping it as soon as it opens with everyone else. There's not necessarily a lot of liquidity. And Rob,
do you think it's just a fact of getting more comfortable?
Yeah, I mean, the more successful deals you have, the more capital you build, and you're able to do that. But yeah, also getting comfortable and reading that sometimes reading the room a bit, that some of this stuff there's no point. Everyone's getting out. I've often bought more on market because after a placement comes on because it's just oversold.
And that's something that I also do personally. We do notice that there is a lot of selling on day one in a lot of these placements. And I know some people have got a strategy of just buying placements after the 2A comes out, because I mean, those are the people that are selling are really, it's just causing such a great opportunity for others, especially in oversubscribed placements. I mean, at the end of the day, selling causes more selling. So when you put in a sell order in the screen on day one, you're not only going to cost yourself money, but it causes a lot of panic in the market. So it's something that, I mean, also myself, I also used to look how quickly you can sell, and at the end of the day, you're just not only hurting yourself, but you're hurting the stock. So a lot of people now will put in their sell maybe 30% above the market, and in such a strong market, you can often see stocks bounce back up there straight away.
Yeah.
So Rob, do you want to maybe talk about some of your most successful trades that you've done?
Sure. So there was TI1, which I think you guys helped the raise for. That's
Tomador, that's an
iron ore. So that was probably a really good example of what I just said of it was really early on. It was probably August, September last year. And I think they raised at 2.5 cents, and I know a lot of people that sold it for 2.8 cents, 2.9 cents.
Some people sold for 2.3 on day one.
Yes.
I sold the majority of my stock for 10 cents. I don't want to brag too much, but
You're good, Rob. You're good.
I also did the last raise at 7.9, and it's at 6.9, so you don't always get it right. But but I think I understood the sector, and I understood that iron ore was really demanded. Whether it actually is demanded or the psychology of just spec investors at the moment, something new in that space with a little bit of good news flow. I felt like it was always going to run. Couple of other ones. There's been some amazing deals that you guys have had with listed and unlisted options. ObviousRNU, they raised today at 8. You guys did the last raise at 1.1 cents or 1.2 cents
with free options.
With free options. So I mean, I'm still holding a little bit of the options.
I mean, that's something that a lot of people have formed a strategy around, is only picking deals with options, because not only if the share price goes up, you make multiples of your original investment, but you do have that. You can always sell the stock and hold on to the options, or vice versa. You can sell the options and hold on to the stock. There's a lot of strategies that people use just to maximize returns and minimize risk as well with options. I
mean, those options day one, they're probably a great example. I think they traded at 0.1 of a cent. And you could have bought them at those listed options on market. I think I had an order in at 0.1, and I think that was pretty traded heavily at 0.2. I mean, I sold some of those options at 11 cents. So you had I think it hit 14 cents at one point. So there's huge multiples there on those options, if you have patience sometimes, especially in some of these resource sectors that you can have huge sort of growth over a very short period.
All right. So, Rob, I know you've got there's a lot to talk about, and maybe we'll revisit some of your stories after, and there's many good stories to be told and also some hard lessons that you've learned. But maybe let's introduce our next speaker. He's very close to us at 180, Simon Schwartz. So, Simon, do you maybe want to just tell everyone a little bit about yourself and how you got involved in the market?
So thanks, Sean. So some of you may know me as CEO of Dorpy. So Dorpy is a new platform we've built that is aiming to change the way the world works by creating a whole new breed of workspaces that we have on the platform, growing every day, which include things like cafes, restaurants, pubs, cinemas, gin distilleries, Melbourne Star Ferris Wheel are all places that you can work now when you join Dorpy. So I guess listening to Rob, my experience over COVID was a little bit different. We started Dorpy before COVID, and then COVID came along and changed everyone's mindset about needing to go into an office to work. And so that's really lit the flame under Dorpy. So we've had a super busy last 12 months as we've been building up Dorpy. So my investment background, I also did a commerce degree and played around a little bit with the share market during those uni periods, and probably was one of many that got scared off during that IT bust where, everyone got excited about things like sausage and things like that. And so put that to bed for a while and focused on, my consulting career. And then more recently decided to, pick up the calculator again and get involved and try and learn a little bit more in this small cap space. And, 180 Markets was a key for getting me involved in investing again. But, it had been a long time, and my investment, was largely sort of on market in a lot of blue chip companies before. So I started really from the ground floor in terms of, what is DVP and where will my options appear when I get them, and all those very basic questions was where I kind of started about 18 months ago and have been building from there.
Yeah, and Simon, it's interesting to hear about the transition from maybe what you call the blue chips, buying the NAVs and the CBAs in the world where, your risk capital would be Afterpay, to maybe even some other companies that are, considered more speculative and in micro caps. What do you think has been the biggest mind shift that you've had to go through to look at the world a little bit differently?
Yeah, well, certainly. I mean, when you're used to doing blue chips and then you move more into small cap space, you're dealing with much smaller timeframes in terms of your investment window. In that you'll go put some money into ANZ and Qantas, and then you'll put it in the drawer and then check on it every few months. Whereas my world's been a lot more of now. I'm busy with Dorpy, that takes up all my time day and night, but having those one or two windows on the side of the screen all the time and just keeping a finger on the pulse of what's going on is something that has definitely come into play with my day-to-day life now. And adjusting to that pace change, because probably similar to Rob, when you first get into it and everything's moving so fast, you do have this tendency to take the stock and quickly move it on because you feel like everything's running 100 miles an hour. So just finding that right pace is probably what I've had to learn over the past year and a half.
And to be clear, you are not watching the markets though day in, day out. You are not a professional investor at this point.
No, I would say that I'm in touch with the market on a day in, day out basis, but I'm not trading on and off, all day. I can go weeks without trading anything. But, also when there's things that I'm interested in, then, I could have a busy few days, but it is not my primary focus. Dorpy's my primary focus. And that's the beauty, I think, of getting involved in, the market, is that you can have it as an extra string to your bow. You don't have to replace another career or something like that by getting involved in the market. You can add to what you're doing.
Yeah, and that's one of the key points I suppose that we wanted to emphasize is that, hopefully, especially for newer investors, is that even if you're not a professional investor watching the markets for 10, 12 hours a day, and frankly, we watch it for a lot more than that even, there's still, plenty of opportunities out there. And I think especially, and I'd be curious if you guys have figured this out in the last year, at the smaller end of town, there tends to be a lot more inefficiencies in the markets, but therein lies the opportunity. Is that something about your experiences as well?
Well, definitely. And, you spoke before about sort of that mindset change. And probably when I started off getting involved in small caps, as soon as the share kind of went below what I paid for it, I was panicking. I didn't know what to do, and now, I've got those shares in my portfolio now that are sitting there because I know that they might be slightly below what I paid for them now, but I know that I bought them because there's some plans for some good news flow and drilling happening, or results from some clinical trials or something like that.
Catalyst.
So I'm getting it exactly. I'm getting that understanding and being a lot more patient, and then starting to add more skills. And by more skills, I mean starting to buy on market when things are below what the entry price was, is like a new skill for me. So that's just something I started to experiment with, play small, see how that worked, and that's now become a little bit more common for what I do.
And Rob, have you found that too, just as far as your confidence level is so much higher than it used to be?
Yeah, I mean, when you first started out, a deal would come across, I'd get a deal, it's like reading another language, like trying to understand all the terminology. But now you see it, you can scan it pretty quickly, see what, how much of a discount, how much liquidity is in the stock, how much is there going to be a good news flow, something that could lead to a re-rate. Is there, is there options? Are they listed or unlisted? A whole range of sort of things that you just tick off in your mind and then reach whether do I think I can make a profit on this over either a short or long term? It does. Every stock's varies, I think. I think if you go in with one strategy for every stock, you're probably going to get burnt. But yeah, I think you can build more confidence. But there's really, I guess the advice I'd say is to start small and learn through trial and error. And if you're starting small, you're not going to get, hopefully, not too badly started.
So I think the biggest thing that we are learning is that there is so much to learn about the stock market, and there's so many different terminologies that new investors probably wouldn't have heard of. And it's all about learning and learning what works for you as an individual. I mean, I've been involved with markets, say, for about 20 years now, and every day I'm learning more and more stuff. The best way to learn, unfortunately, is from mistakes. The amount of mistakes that you make will just help you in the end, and you need to have a bit of capital to make sure that you just don't get burnt out too easily. And I think what Rob said before is just spot on. You got to start small, and you got to learn what works for you. It's also really important to look for the upcoming catalysts that I think investors are waiting for in every stock. There's news flow is just so important, and if you go and you're taking a position in a stock that has upcoming news flow, you've got to remember when they're expecting different results, and if a company is drilling, do you want to hold for the results, or do you want to sell some just before the results come out? It's well, I mean, one of the strategies that I've pretty successfully done over the years is investing in companies that have got a big event coming up, and sell before the event. So sell maybe like a week or two before we hear the results. So we've all seen one of our recent most successful placements we've done on 180 Markets was a company, 8080. They raised money recently at 0.8, and we know a lot of investors that took that placement and sold day one at 0.8, and they sold at 0.9. They were drilling. They had I don't know, I can't remember where they are, but they're an oil and gas company that had a big well that they were drilling, and the share price went from 0.8 to 10 cents, just an expectation. They didn't announce any success. All they had was a market build-up of excitement, and that happens a lot where before results are due, share prices go up just in anticipation, and the returns that some people made were phenomenal. But saying that, the share price has come back down when they did release their results. So, I mean, results were inconclusive, but there's so many opportunities that when there is news flow, just to work out when the results are coming. Do you want to hold into those results? When do you want to sell? And stick to a plan. And if it doesn't work for you, try something different. But yeah, just try and learn the whole time.
I think that you see these companies, a lot of these small companies, we've seen that some of them raised 2 or 3 times now in the last year. And you get a feel, the longer you're in it, you get a feel for the companies that are good at releasing news as well. And they're good at creating some positive expectation and driving up the price through their press releases and their company announcements. So I think the longer you're in it, the more that you research, the more you understand the companies before they get announced. So before a raise comes. So if you know the company, it's a lot easier to invest in it. But there's no real sort of replacement for that other than time. So again, I mean, RNU raised again today. I don't even have to read what they're doing, because I know exactly what they're doing because I've been invested in the past. So I know they're really good at news flow, and they should hopefully keep having good announcements, because the projects they've done have been quite successful.
Yeah, and then, you know, one of the questions that we get a lot of is about position sizing. You know, we get the questions, I would say 2 to 3 times a week, literally, you know, Greg, you know, how much should I be investing? And it's the reality is there's no one size fits all. It really does depend on your risk tolerance. I'd say, you know, from an extremely high level, you've got to be comfortable, but probably slightly uncomfortable. That would be my best description of it. But it's probably the number one question that at least I field.
Yeah, and just to sort of, I guess, echo the new investor side of that, Greg, I think one of the things that's difficult as a new investor is, there are potentially a lot of people around you that have got great experience, but I think everyone's going to be a little bit cautious in terms of the help they can give you, not because they're trying to keep trade secrets necessarily, but I think that, we are talking about people's money here, and even, I've grown to realize that even the most experienced investors don't know necessarily what's going to happen, and
Absolutely.
And there's no certainty in this. So I think as soon as you can kind of let go of the jetty and sail a little bit yourself, and for me that actually just involved watching YouTube videos of different fundamental strategies and different technical strategies, and I found that I felt more attached to the technical strategies, and so I started to pick out a few indicators that I want to watch and apply them. So yeah, I think you sort of said something similar as well, Sean. It's about just finding some things that you feel as though in your stomach help you make those calls.
Well, that's right. And I mean, I know it is a pretty big stomach, and I am getting some messages offline. So if you can please stop that. One thing we don't like, and one thing we're not allowed to do, is to give people advice. And why we don't like it as well is you're not going to learn if you rely on other people's advice. The only way you're going to learn is from your own mistakes. And that may sound hard and harsh, but you're not going to learn by following others. And just because we have been around in the game for quite a while doesn't mean we always get it right. We get it wrong a lot of the times. And thankfully, we can learn from all those mistakes. I think it's really important to find out what works for you as an investor. Like myself, I'm very high risk. I don't mind taking a bit of risk, so I can handle taking the losses, and you've got to be prepared to take losses as well when the story changes and management aren't delivering what we originally thought they'd deliver. Then it's time to get out. And I know a lot of people do struggle taking those losses, but you often got to ask yourself, would I be buying the shares now? And if the answer is no, then it may be time to sell, no matter how much money you're down. So look, you just got to learn, and the market's always going to be here. You don't need to be active straight away. You don't need to go hard in your first few trades. The market's always around, and we got to use it to how it best suits everyone.
Yeah. In closing, I'd say that, just echoing what Sean said, there really is no one size fits all. Every investor, no matter who you look to, does it slightly differently, no matter how they classify themselves, whether it's a value investor, momentum investor, day trader, or whatnot, they all do it slightly differently. And the best, unfortunately, as Sean said, the best metric is to find your P&L and find what is working and what is not working. And also, I think it's important to track how the market is moving at those times, because a lot of times your P&L will be correlating highly with the markets.
And just before we close, so we are going to be having another Zoom next Wednesday. It is going to be more focused on our 180 deals and more what goes into those deals. So we'd love you all to join us. What we are trying to do at 180 is we've got a lot of investors that we know follow us into deals, and while we are not allowed to give advice, but all our exclusive deals like the ones we did today, we are investing ourselves, and usually there's a reason why we have picked those companies to invest in Cornerstone. So next week, we're going to talk more about that process and what we're looking for in our investments. And a lot of the raises that we've done, they don't go up straight away, and we don't expect them to. There's normally a strict timeline that we focus on, and it's usually about 3 to 6 months. So they've all got upcoming news flow. They're all in sectors that we believe may really catch a light. And we've seen when sectors get hot, a lot of stocks move. And there's a lot of work that we're doing into the 180 markets deals. We're not just doing deals for the fun of it. We're doing because we invest in them, and there's reason behind that. So hopefully you can all join us next Wednesday. And yeah, any closing remarks?
No, just again, we just want to echo, we're so thankful to have each and every one of you as an investor. And we really hope that, despite what's happened in the last year or so with COVID, that we've made up some of that difference for you.
So I think just before we finish, we're going to open up the floor. There may be some questions. On the chat, are there any serious questions, or are they all about my stomach?
No, everyone's just saying it's great.
So there's no questions? No. If anyone wants to ask a question, let us know.
Okay, we have a question.
Yep.
How do you normally allocate the bid?
Okay, so, yep, that is a very good question. And our allocations, let me just say, are fair. So we do have when it comes to a deal that's heavily oversubscribed, every investor gets the same allocation unless if there's an investor that has about 70 to 80% of the book, then they get scaled back more than others. For our 180 markets deals, the cornerstones do receive high allocations. We have reached out quite a few times. So if you do want to join our cornerstone book, then let us know. Basically, to join we've got a pretty big group now that cornerstone a lot of our raises. Two criteria, I guess. One is that you invest over the minimum, and that's $50,000. And the second is that you've got to tell us why you believe in this opportunity, and you're not going to look to sell in the first week or two. We don't encourage selling on straight away. And as we have said quite a few times, that you're your own worst enemy when you do sell straight away. So we do have a pretty fair allocation process. We do welcome people joining us in the Cornerstone book. Like today's deal that we did, the Cornerstones will receive, I'm not sure what percentage it is, but it will be higher than everyone else. And then everyone else receives the same proportion. So it's, our allocation process is very consistent and fair. And anyone that does, there are quite a few people that do get 100% of their bid, but they get in pretty early. So, and they do know the company pretty well.
I'd say from my experience, something I've definitely learned over the last year, it's better to have less of, if it's got a lot of scale back, better to have less of something hot than a lot of something not. So I guess I know people get annoyed about scale back. But
And just while we're on that, always bid for what you want to take, because a lot of deals you do get 100%. So one thing we do not like is if people get a higher proportion than what they thought they would, that they're not happy. There's once you bid,
It's a bid.
it's a bid, and that's don't overbid, guys. It's not cool. Any other questions?
Okay. Yeah, we've got quite a few questions, so we'll try to get
Fire.
to as many as we can. How many active clients do you have, and is this number growing fast?
We do have a lot of active clients. So I guess there's two different type of active clients. So one is sophisticated investors. Look, we don't need to mention numbers, but it is growing fast, and it's something that we're very proud of. And you need to be a sophisticated investor to participate. But saying that, you can still join the platform if you're not, and use it for knowledge and to see what placements there are. But we can only allow sophisticated investors to participate in deals.
Okay. Is there a list on your website of the deals that 180 has cornerstoned?
I don't think there is.
But it is a good suggestion, and we'll definitely take
Thanks
it on
for
board.
the suggestion. I think you can look down, yeah, and just look. 180 Markets is still very new, and we have a lot of new things we trying to develop on our platform. Every day we changing things and making it easier for you as an investor. Like we know record keeping is something that a lot of people have asked us to make easier, and that's something our developer is working on at the moment. But we don't have that at the moment, but that will be coming.
Yeah, I'll just say a point on that. If you do have any suggestions that you'd like to see on the website or something to make the deals easier for all of you guys, feel free to email us or call us on our hotline number, and we can have a chat about it, see if we can fix it up.
Cool.
Okay. Are all allocations visible to the investor in their respective brokers on the same day, or are bigger investors coming through, say a full service broker, able to access the allocation sooner?
No, in answer to that question, you as the investor are the first person to get your allocation for sure. And then it's up to you to forward it on to your broker.
Well, one thing that I want to make clear is that as soon as we do receive an allocation from a broker, we do send it out. So we do get a lot of people asking what's my allocation, and that we can't move any quicker than what the broker can send us allocation. So as soon as we get it, pretty much within 5 to 10 minutes, you're going to get it in your inbox. So that's something that we've made sure that we're acting as quick as possible on.
Okay, how do you ensure your personal bidding isn't prioritized over clients?
All right, well,
is there a conflict?
Okay, so yeah, there is a conflict, and we make sure that in any deals that are not 180 Markets cornerstone, we get exactly the same allocation proportion that investors get. So if a deal gets scaled back by 30%, our bid will get scaled back by 30%. In some times, when a deal has been scaled back by 80%, we'll actually remove our bid, because
it's just no point.
It's embarrassing from us when we give investors under 10% of their bid. It happens. It's out of our control. And yeah, there is a perceived conflict. With our own deals, we are part of that cornerstone. So we make sure that our bid is in there before, and we are doing a lot of work behind the scenes. So we make sure that our bid is part of that cornerstone, because we are investors first. And we want to make sure that we are investing in these companies alongside you guys. And we will always be part of that cornerstone for our deals. So I hope that answers the question, but we can see how there is a conflict, but we make sure that our investors are first. And
yeah, and I think that just even adding to that, we built 180, by investors for investors, firstly. Secondly, and you'll occasionally get some emails from us that are not perfectly written. There could be some grammar errors, and they seem very vague. But believe me, that only comes from a place of, we are telling you what we know as soon as we possibly can. We don't always get it right, and things change, but it really does come from a stream of consciousness.
Just skipping ahead a few, someone has just asked or stated that PDN was a good example of where the scale back was huge, less than 10% of the bid, even though they bid as soon as it was announced. So maybe just clarify that it's not as fast as you bid, it's just a fair allocation.
Oh, it's never as fast as you bid. The only time it is as fast as you bid is when we close the book after 10 minutes. But bidding speed does not affect allocation. If you bid 2 minutes after the deal goes live, or if you bid 4 4 hours after, it's not going to affect your allocation. The only thing that I may say is a lot of the hot deals like PDN will close as soon as we feel that our book's too high. Yeah, look, a lot of the times our allocation is going to be low, and that's because, I mean, A, our bid is really high, or B, the lead broker just gives us such a little amount. And it is embarrassing from our point of view, but it's completely out of our control. As I said before, you got to bid expecting that you can get 100% of your bid, but at the same time, you may end up with 5%. And it doesn't happen often, but it does happen. It also happens that we may get a zero allocation, and that's something we always try and avoid. And we always ask the lead broker, will we definitely get an allocation? And look, there have been a few times that we haven't put deals on the platform because the broker has given us zero before. And one thing we want to make consistent is that we always get an allocation from the broker. If a broker is going to use us just for the firing power, we're not going to take that.
Okay. So normally it takes a week for the shares to be available for selling. Why is it so long? Can a button for easy download of the allocation list be available?
Yeah. So as I said before, we are making that available. With our developer is working on making record keeping as easy as possible. So yeah, we will have that button soon. In terms of getting your shares to you sooner, that is completely out of our control.
Yeah.
There's a lot of things that happen with settlement that people, you got to allow at least 3 to 4 days before shares can be allocated. It's not as easy as receiving the money and just handing out the shares. There's a lot of work that goes into.
Yeah, typically you'll have, a minimum of 3 business days. Then if you add in the 2 weekend days, and then there's another day for allotment. And if you just add up those numbers, it's certainly, it's pretty typically, I would say, a full calendar week at least.
But we'd hope that you're taking these shares to not sell straight away anyway. So, I mean, a lot of the times, it shouldn't really matter.
Keeping track of unlisted options is hard. Can you include information about allocated options and expiry dates and strike price in the allocation confirmation?
We try to. It's not easy because we're only as good as our developer at the end of the day. And I mean, maybe
we're trying very hard. The challenge there also, to be more specific, is that there are various registries, and we have to get links into all the registries, and getting those all set up is a mean challenge for sure.
Yep. So what we would say is when there are listed options or unlisted options, just keep track of them yourself. And one of the best gifts I've ever received is getting something in the mail saying, you still got these options in this company that were unlisted and the share price has gone up 10 times. So, you just got to keep track of it. It is pretty hard for us to do that, but we will try and put that on the platform in the near future.
Okay, another one about admin, but when there is a heavily scaled back placement and you have the opportunity to decline an allocation, can there also be an option to mock up other allocations that have been declined?
So, what we typically do, for those that don't know, is if a deal has been heavily scaled back, we do give investors a right to pull out. It is really hard to then hand those out to investors because everyone wants them. So we do have a list of people that have in the past put their hand up, and we can't create something on the platform that says, give me the shares, but it's just send us an email. If there's something that you do see that is a hot deal, we do get a lot of emails, and we usually just respond to that, but creating a button for that on the platform's
just email it in if you're interested, and you know, people are always checking that.
yeah. But just so you guys know, we don't take those ourselves.
No.
Like those are always there are a lot of people that usually request those shares. So, and obviously there's a reason why.
Okay, so Tony, I'm just going to rephrase your question a little bit. I think maybe it's a typo, but how do you apply to those IPOs which are not under the 180 markets?
So basically what 180 Markets has been trying to do since we started is, I'm actually not answering the question, but I'll get into the question afterwards, is create as many relationships as possible. So as soon as there is a placement or an IPO, we reach out to the lead broker. So I'm not sure if Tony's question was at us, how do we get an allocation, or how should he? But I guess to answer that is, for every raise out there, we are trying to get access, whether it's an IPO or a placement. As soon as the stock goes into a trading halt, the guys are on the phone calling the company, asking who the broker is, and then we develop a relationship with the broker so we can get all their raises. The same with when an IPO, when we see that there's a new IPO, we'll contact the company and the broker. What you can do as an investor, if we don't have access, is pretty much the same thing. Give the company a call, and a lot of the times you can bid directly through the registry. A lot of these really hot IPOs, you can bid at the registry and they may give you spread. And because companies need at least 300 shareholders to list, you're a good chance of getting a small allocation.
Okay, if your strategy is short-term holding, does that hurt the clients?
Not sure the question. If your strategy is short-term, can you just repeat it?
Yeah, if your strategy is short-term holding, does that hurt the clients? I think if you sell.
Okay, so I think that's aimed at us. If our strategy is short-term holding.
Well, if you want to write your question in more detail.
Yeah, that's
yeah.
right. But look, in any of our own deals, we're not short-term. So the raise we did today is not. I mean, you shouldn't be looking at a lot of raises short-term.
We're looking for the catalysts.
Yeah, as we said before, there's a lot of news flow. If your own strategy, I'm not sure if the question was if his or her own strategy was short-term, does that hurt other clients? Depends on your size, I guess, but I'm not sure. But yeah.
So yeah, Will's just written, the panelist said selling short-term is one of their strategies. Does it hurt us as investors?
I think that the key with selling is, how do you sell? There are ways to sell. In other words, where candidly, we saw the other day a stock where all of a sudden we could see all the sell orders come onto the screen by 9:15 in the morning there, and that absolutely hurts the stock when you're leaning all over. It's the way that you sell that really matters. Are you, what percentage of the volume are you? That's really going to be the determinant more than anything else. And I think that, I don't know if it was online or offline, or, Rob alluded to the point that there was a company out there and there was just no point to sitting out there trying to sell because there's no liquidity. That hurts yourself. It's how careful you are when you're out there.
But I'll just add a point onto that. In our own raises, the cornerstones, if they do sell day one, they won't be a cornerstone.
Yeah.
Because we have had situations where we were told by a pretty big investor that they would be a long-term holder, and day one they sold and the share price straight away went under. So something that we trying to improve on is getting people to understand the deals that we're doing and
and what they entail.
Exactly.
Okay.
A couple more.
Some deals do not seem to specify if an option is listed or unlisted. Why is this?
We do our best to specify this as soon as we know. The only reason would be if we don't know.
Absolutely. From a legal point of view, when we say to companies, options to be listed, it can never be fully 100% guaranteed that they will be listed. It's always on a best endeavors basis, saying that companies, when they do say that, they do try to get on their best endeavors. And I would say, a very high percentage of the time that they are listed.
There's a lot of criteria that the ASX demands for a company to list options. So a lot of companies try and best endeavors, and you just got to keep the ASX happy with everything.
Okay. Is there any risk management processes from 180 before the placement or IPO before it releases to investors?
One thing we need to make clear is 180 Markets do not give advice. So I think the best way to answer that is on any deal that comes on the platform, there is no due diligence by ourselves. This is a do-it-yourself platform. This enables you to do your own strategies and create your own due diligence. As long as it's listed, we'll put it on the platform. The only due diligence we do, and I've got to be careful how I answer this, is on our own deals, but we're not giving advice. It may be our own deal, and
Right.
we have done work, but assume we haven't, because
Yeah.
you're buying with your own, we're not giving advice on any of them.
Correct.
We're putting in our own money in our own deals, but there's a lot of risk involved. All these companies we're dealing with are not BHPs, they're not Coca-Cola. They're the bottom end of the market. They're high risk, high reward.
Yeah.
Okay, I think we're on the last two questions, but just for everyone's knowledge, people are writing some answers in the chat box, so feel free to have a look in there as well. So have you thought about adding block trades to your platform?
We have offered it in the past. It's really hard because we're not a broker. So it's a lot harder than a placement, but we have offered it and we can facilitate it. The other thing is block trades often happen over a period of an hour. So it's by the time we can get on the platform, often they close. But yeah, we can offer them, but it's a lot harder than a simple placement.
Okay, I don't think this question will be answered, but I'll ask it anyway. Of your own money, how much percentage do you put in each deal?
It varies for each deal.
It varies for each deal, but rest assured that there's a lot of capital being turned over.
There's
We're going to feel the pain if you feel the pain.
Yeah, look, there's investment advisors out there that can help you with your own allocation, how much you put into each asset class, and yeah, everyone's risk appetite will affect everyone's allocation. So Ariella, do you want to maybe go over some of the answers that people are?
Yeah, we do have two more questions just came through.
Go for it.
Yeah. Okay. Why are companies offering options? If the deal looks great on paper, why is there a need for options? RNU today didn't come with options like it did last year.
So it's a good question. Options are a way for companies to avoid immediate dilution. So usually the option is going to be out of the money, which means the options, the exercise price is higher than the current share price. So it gives incentives to the investor that they got another access to making higher returns. And if the share price does go up, then the options are going to be worth some money. So a lot of the times options are added as what's called a sweetener. So just to make the deal seem a bit better for investors. And a lot of the basic reason is just to avoid immediate dilution. So you can issue less shares at the current placement price. And another reason why options may be included is the company may think that the share price will go up, and that may be the next placement price. And they may not need to have another placement.
Yeah, okay, I think this will be the last question for tonight.
Yeah.
But what do you do as the broker to manage the share price on your deals? What promotions?
Sorry, can you just repeat that?
What do you do as the broker to manage the share price on your own deals, for example, promotions?
All right, so we do no promoting. One thing we may or may not do on our own deals, and is buy on market, but I'm not going to sit here and say we always buy on market because it's different for each deal. But definitely on our own deals, we don't worry when the share price goes below the placement price. I mean, Rob can tell you in one of his, on that RNU that he talked about before, that the one we did at 1.1, it did go below the placement price. It was below for quite a while, but I think when the share price hit 5 or 6 or 7 cents, people weren't too concerned about that
Precisely.
1 month period. So a lot of our deals, we're not looking at the next week or the next month. It's more for a medium term.
Yeah, and that big catalyst.
Okay, I'll just read out some of the important things from the chat box that I think might be helpful. So Jeff has said that he's set up a spreadsheet to track unlisted options and that he's happy to share it with anyone that might be interested.
That's awesome.
That would be
Thanks,
great.
Jeff.
And Martin said some options start off unlisted and then become listed later on.
Correct.
So options need ASX approval to be listed. So there's a whole process that goes into it. So the options that came with today's 180 Markets deal, I think A, need shareholder approval, B, need at least 50 shareholders, which it'll get. It needs the company to fill out a lot of paperwork, and it'll take, in this situation, at least 2 months just to get listed. And it's often better because options usually the time frame usually, the expiry is only once you allocated your options. So the longer the options.
I'd say my biggest successes on the market have been from options, and some of them have been unlisted. And as Sean said, you get that letter in the mail and you're like, wow, okay, I had one that I had 20-cent options. It traded just under $1 yesterday. So
is that CVV?
CPV, yeah.
Yeah.
But yeah, it's kind of like almost like a lottery ticket that you don't pay for. They're unlisted.
That's right. Yeah, so keeping a list of your options is good, but it's often the ones that you forget about are the best ones. But yeah, no, try and keep a spreadsheet or something yourself. And yeah, I know record keeping can be really hard and there's a lot of paperwork involved.
Okay. Well, everybody, thank you so much again. You know that we're very responsive to inquiries. Somebody's always checking things. So any further follow-ups, just let us know. And we're really looking forward to seeing most of you, at least for next Wednesday night as well.
Thanks, guys.
Thanks.
Special thanks to Rob and Simon. We really appreciate your time.
No probs. Thanks for having us.
Thanks.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.